after announcing that pause in policy widely along expected lines. But, more than the policy measures, it was the banking measures that caught the attention of the markets that were the focus. For the first time ever, I think we've had as many as 22 measures announced for the banking and financial sector as a whole. Let's cut in, to the governor and his deputies who are addressing the media as we speak. Stand by. There's really been these raft of changes as far as bank lending is concerned. We've not seen this before. Acquisition financing, easing norms. Okay, there we go.
Welcome to this post-policy press conference, fourth for the 25-26. Friends, we have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J., and Dr. Poonam Gupta. We also have with us Executive Directors, Dr. Ajit Joshi, and for the first time, Dr. Indranil Bhattacharya. I also welcome my other colleagues from the Reserve Bank. As always, we'll have a few housekeeping announcements. Sir, there are around 23 participants from the media, and I request the media participants to please stick to one question so that everybody gets a chance. I'd also request everyone to switch on the mic when they are intervening so that the people listening to this transmission, they are able to listen clearly. And once you are done, please switch it off. Sir, so with your permission, I'll call out the names. I would ask Ms. Lata Venkatesh from CNBC to ask the first question. Lata, please.
Thank you, Puneet, and thank you, Governor, for the opportunity. You have said in the statement that the fall in inflation opens up space for further supporting growth. You have omitted the word limited, which was there previously when you said limited space. So should we understand there is space for more than one cut? And what is the trigger? If you had the space, why not now? What trigger are you waiting for? You also said that the transmission is broad-based. Are you okay with the way bond yields have moved? There doesn't seem to be transmission there.
Yes, there is a change, as you have noticed. I mean, inflation has reduced considerably since we met earlier in June by 1%. And so that does open up the space. At the same time, growth you have seen, while it has surprised us on the upside in Q1, Q3, Q4, and even next year, there is a downward revision slightly. And as mentioned, it is on account of the tariff, the 50% tariff that has come into play, offset to some extent by the GST. Why not a rate cut is again, given in our statement. Monetary policy transmission, while it has been good across sectors, it is still happening. And it's not only monetary policy transmission. There are other policies, for example, the government GST rate and a number of other policies announced by the Honorable PM and the government. They are taking shape and their impact is still unfolding. At the same time, there are still a lot of uncertainties. We see developments every week, every day, and we also see responses there too. There is still, clarity on that account. And so that's why the MPC felt that we should pause. Insofar as transmission to government bonds is concerned, you are aware that there was a good transmission of about from 686 peaks or thereabout to 630, about 46 basis points. And after that, there has been a hardening. So the net impact thereof is only about 660, 659 today, so about 30 basis points, more than 30 basis points, yeah, about 30 or less than 30 basis points in the government yields. We are watchful and we'll see, how ultimately it is, of course, for the demand and supply. We'll see how all the needs of the economy are supported.
Speak about limited. Why did you drop that word?
I mentioned no, that inflation has dropped by 1% from our earlier forecast. It is now at 2.6% from our earlier forecast. So it has dropped down by 1%, and so that's the reason. And the growth at the same time, I did mention, has also been revised slightly downwards. Primarily, of course, as I mentioned, on account of trade-related, the higher tariff that has come into play, which is still negotiations going on, etc., still unfolding. But we have taken that.
To cut, not limited space.
Yes, we have made that change. Yes, and that's the reason. The changing growth inflation dynamics is the reason that we have changed the language.
Thank you, sir. For the next question, I'll ask Mr. Mayur Shetty from Times of India. Mayur, please.
That's the attempt, that whatever are the external headwinds, we try to counter them. Ours is primarily a domestic demand-driven economy, so the impact is limited. It's not as high as some of the other countries, as I had earlier mentioned. And the government, as well as the RBI, both fiscal, monetary, and other policies, will make all efforts to ensure that whatever are the headwinds, they can be countered. At the same time, you are aware that negotiations are still going on. Government is looking at other means, opening up other markets. There has already been a trade deal with the UK. Negotiations are on with so many other countries, including Oman, EU, etc., that will also open up markets for our exporters. And on the whole, the Indian growth has been quite resilient, and we are very hopeful that we will continue to maintain a very high growth trajectory while maintaining price stability.
Thank you, sir. Next, I'll have Mr. Manojit Saha from Business Standard. Manojit, please.
Yeah, thank you, Governor. The commentary is that inflation is coming down while there is softening of growth expected because of the trade-related uncertainties. I wanted to understand. So this clearly hints that going ahead, rates can probably come down. Rates going up is not an option. So, is there a discussion to change the stance to accommodative?
Yes, there was a discussion. As you have already noted, 2 members want it. We don't have a vote. It's more of a forward guidance. Let me again, clarify. This was clarified in one of the earlier policies. It has got nothing to do with liquidity. It is only as a measure of forward guidance as to where the rates can be going forward. So 2 members, Professor Ram Singh and Dr. Nagesh Kumar, have given their guidance as accommodative, while the others have maintained it at neutral.
Thank you, sir. Next, we'll have Ms. Hamsini from Money Control. Hamsini, please.
Thank you. Good afternoon, Governor. I'll move a little from macro aspects. One of the things in the policy speech which sort of caught my attention a lot was the limits for specified large corporates. That has been sort of done away with, and the reason in 2016 it was introduced, one of the reasons cited was to also develop a very vibrant bond market and de-risk the banking sector to some extent. So now that we've gone back on that, what is the inference that one should make, that credit growth for large corporates should once again come back or be fed by banks, or despite all efforts to create a little bit of vibrancy in bond markets, it's not yet picking up. How should we infer that particular change, sir? And as a continuation to that, a lot of changes have also come pro-banking sector in this particular speech. Like, for instance, funding acquisitions, etc. What was the rationale in making or in opening the doors for ease of doing business for banks, granting a lot of their wants?
A lot of questions in one question only. First of all, my understanding is that the 2016 policy was more about mitigating risk and reducing, limiting exposure to large corporates at the banking system level, not at the bank level. For the bank level, I would like to clarify that the large exposure framework which was there continues. There is no change at the bank level, individual bank level, whatever is the large exposure framework continues. At the banking system level, any borrower which was having an exposure, a credit limit of 10,000 crore rupees or more from 2019 onwards, this limit was progressively reduced from 25 to 15 to 10,000 starting from 2016 to 2019. That has been done away because it is felt that that the large exposure framework is able to take care of the needs at the individual bank level and at the banking system level. If there is a need, we have the macroprudential tools already to take care of that. Thirdly, you have been seeing, that the share of corporates in the total banking exposure has in fact, come down over the years. I do not have the right numbers. I think last 10 years it has reduced by about 10% or so. So the risks are not so many. So that's the primary reason, why we have reduced, why we have proposed to remove this large exposure framework for specific borrowers at the banking system level. And then there are a number of other measures, ease of doing business. I think we announced 7 measures on top of some 5 measures, smaller measures, which we had announced couple of days ago. That's a continuous process. We need to continue looking at rationalizing our regulations so that the productive needs of the economy are met with the least of compliance burden, with the least of cost, while at the same time ensuring that wherever prudential measures are required, they are not compromised.
थैंक यू सर. अब मैं श्री अनुराग शाह ईटी नाउ स्वदेश से आग्रह करूंगा कि वे अपना प्रश्न पूछें. अनुराग जी.
थैंक यू सर. पुनीत सर. सर, जिस तरह से आपने अपने संबोधन की शुरुआत में भी जीएसटी रिफॉर्म की बात करी, आखिर में भी जीएसटी रिफॉर्म की बात करी, तो सर जो ग्रोथ का टारगेट को रिवीजन किया गया है उसमें टैरिफ का कितना योगदान है और जीएसटी रिफॉर्म का कितना योगदान है? और क्योंकि सर 22 तारीख से ही ये रिफॉर्म की शुरुआत हुई है, तो आगे चल के इसमें और ज्यादा जो ग्रोथ का आउटलुक है उसमें और बदलाव हो सकता है. और सर महंगाई को जो आपने 3.1 से 2.6 में लाया है, तो जो जीएसटी रिफॉर्म है एक सरकार की तरफ से बहुत बड़ा ऐलान किया गया और उससे पहले बजट में जो पर्सनल इनकम टैक्स में ऐलान किया गया था, इन दोनों के बाद से लोगों के हाथ में काफी ज्यादा पैसा रहेगा और वो कंजम्पशन में जाएगा, तो वो महंगाई पे कितना इम्पैक्ट डालेगा? और सर एक पिछली बार मैंने एक सवाल पूछा था, लेकिन सर वो थोड़ा सा सही से नहीं पूछ पाया, तो अगर अनुमति हो तो बाद में पूछ सकता हूँ.
तो पहले ये जो आपने बोला है, ये सभी का जो प्रभाव है, चाहे वो जीएसटी हो, चाहे वो 50% टैरिफ हो, बेसलाइन में हम 50% टैरिफ को मानते हुए ही हमने सारे अपने अनुमान अब इसमें अनुमान में हमने उसको इंक्लूड किया है. तो लेकिन जैसा कि स्टेटमेंट में भी बताया गया कि जहाँ तक वृद्धि दर की बात है, तो जो टैरिफ है 50% का टैरिफ और साथ ही साथ जो अनसर्टेनिटी है, ग्लोबल डिमांड, इसके 2 इम्पैक्ट हैं. एक तो जो ग्लोबली डिमांड पे न केवल यूएस डिमांड बल्कि पूरी ग्लोबल डिमांड के ऊपर में जो कमी आएगी, एक वो इम्पैक्ट है जिसकी वजह से हमने, आपको मालूम है कि 20 बेसिस पॉइंट्स पहले अपनी वृद्धि दर 6.7 से 6.5 करी थी, और अब एक 50% का जो इम्पैक्ट है वो डायरेक्ट एक्सपोर्ट्स यूएस के ऊपर में है, जो कि कम हो सकता है यदि जो अभी जो वार्ता चल रही है वो और सकारात्मक होती है, और जीएसटी का इसका जो प्रभाव है वो उससे कम रहेगा, हमारा अनुमान है। तो इसलिए वो पूरी तरह से ऑफसेट नहीं कर पाएगा। कुल मिलाकर के जैसा कि हमने कहा करीबन 20 बेसिस पॉइंट्स औसतन की कमी इन सभी इम्पैक्ट्स की लेते हुए हमने ये अनुमान अपना लगाया है। कुल मिलाकर हालांकि इस साल में चूंकि पहले 6 माह में अच्छा इकोनॉमिक एक्टिविटी हुई है और हमारे पास में नंबर्स ऑलरेडी आ चुके हैं, तो इस वजह से कुल मिलाकर के इस वर्ष का जो ग्रोथ फोरकास्ट है वो बढ़ा है।
धन्यवाद सर। अगर समय मिला तो बाद में पूछ लीजिएगा, बाकी सबको मौका मिल जाए। धन्यवाद सर। नेक्स्ट आई रिक्वेस्ट स्वाति भट्ट फ्रॉम रॉयटर्स। स्वाति प्लीज।
Thank you, sir. So, at the RBI for the last decade or so, largely the focus has been on reducing the banking sector risks. But now by easing the large exposure framework, allowing banks to, fund acquisitions, IPO financing, more in shares, aren't you in some way, making, inviting possible risks here? I mean, and what are we trying to achieve through all this easing? Can you just throw some light on that? Thank you.
We have taken measures very balanced, calibrated, thought out, considered. Even though we'll be doing a public consultation, even pre the formal consultation, a number of consultations, and there are measures on both sides. There are at least a couple of them, ECL, credit risk related capital adequacy norms, which I won't say which put high requirement, I don't think so, but it will be better targeted. Those banks, depending on the risks, some of them may have to provide, and keep higher credit, it will be better targeted. And similarly, some of the other measures that we have taken to enhance the flow of credit, improve the competitiveness of the banks. It's not as if those measures were not there at all. For example, project finance, we were already allowing project finance. Project finance for infrastructure companies was already allowed. We have not seen, I'm sorry, acquisition finance. For acquisition finance was not, was already allowed for infrastructure companies, and now we have expanded it. Similarly, the loans against shares, etc., or for IPO financing, it was already there. It was not revised for a number of years. So it's but natural that, we revised them. I think on the whole, all these measures taken together, and we'll continue to take more measures, as and when required. Always the aim will be to promote the stability while at the same time improving competitiveness, encouraging and enhancing growth of the economy. You want to come in?
Sir, I think as Governor has already mentioned...
Because number of measures actually, these measures pertain to the regulation division. I request DGMRR to...
I think most of the measures have been well thought out and calibrated, one. Second, the banking system's ability to handle the risks has improved over the period, so there is some enough provisions. Third, most of the measures have enough guardrails built into them to safeguard the interests of the banks and the financial system. And speaking of the loans against, I think the limit has gone from 80 to 1 crore. I think the limits were last 1998. So overall, I think it has been a calibrated set of measures, and again, it's coming up for public consultation, so we will take the feedback and revise it if appropriately required.
Thank you, sirs. Next, we'll have Mr. Vishwanath Nair from NDTV Profit. Vishwanath.
Hi, good afternoon, Governor. I'll go back to your first speech as RBI Governor, where you spoke about the cost of regulation and the ease of regulation. Are we to see these 22 guidelines that, or whatever indications of guidelines that you've listed out in today's speech as a move towards that? Because while ECL is a very necessary and very delayed sort of framework that is coming in, a lot of others seem to be giving banks whatever they were asking for, some of it. Like, for example, acquisition financing was something that banks have been speaking very vocally about over the last few weeks. Is that how we should see these moves?
Yeah, see, circumstances change, times change, requirements change, and so nothing should be frozen in time. And so that's why we had earlier also said that we will be continuously reviewing our regulations. In fact, we have decided in the FSDC under the chairmanship of the finance minister, where all the finance sector regulators come together to review each and every regulation every 5 to 7 years. So while we are doing that, and while it will be a continuous process, as you are mentioning, some of these things which have come our way, we have thought it appropriate to revise them, and that's it's very important that we continuously revise, review, improve our whole regulatory ecosystem.
Thank you, sir. Next, we'll have Mr. Anup Roy from Bloomberg. Anup, please.
Thank you, sir. Sir, in the policy you mentioned about rupee reference rate with trading partners. Now with major trading partners, so far we have 4 rupee reference rate, and now it will be expanded. So what are those currencies? And also I wonder, what will be the benchmark reference rate that you will use? And will that also increase rupees trading in the international market? Like, what I mean is that earlier there used to be a cross currency like INR, USD, and then USD, say CNI. How will you fix that?
Yeah, I think the objective is that you minimize the use of crossing currencies to get rates. That will help both our currency as well as the other currency. We are currently looking at a couple of currencies. We are looking at Indonesian rupiah as one. We are looking at AED for another. But there are a few others. We will gradually keep taking them up. About your question on how do we set the benchmark? We'll have to see. We'll have to see because there are not many active transactions to begin with. So the process FBIL has to work out, what is the best way of initiating something. This is a case where, the pricing, the reference has to be shown first, and the market has to pick up from there. So keeping that in mind, we'll have to work out ways of, how do we arrive at what benchmarks do we use for these reference rates. Thank you.
Thank you, sir. अब मैं जी बिजनेस की एकता सूरी को आमंत्रित करूंगा कि वे अपना प्रश्न पूछें.
गुड आफ्टरनून सर. सर, मेरा सवाल यहाँ पर आम लोगों से जुड़ा हुआ है, उनकी जेब से. मैं ये पूछना चाहूँगी कि पिछली पॉलिसी से लेकर इस पॉलिसी तक 2-3 खबरों ने बहुत तूल पकड़ा हुआ है. सबसे पहले तो ये कि क्या बैंकिंग सेक्टर का ये कहना है कि जिस तरह से यूपीआई ट्रांजैक्शंस बढ़ रही हैं, हमारे इंफ्रास्ट्रक्चर पर बहुत बड़ा एक तरह से बर्डन भी बढ़ता जा रहा है, लेकिन कॉस्ट उतनी हमारी रिकवर नहीं हो रही. तो क्या आने वाले दिनों में यूपीआई ज़्यादा बड़ी ट्रांजैक्शंस पर किस तरह की कोई फीस लग सकती है? और दूसरा एक खबर ये कि यहाँ पर बैंकिंग सेक्टर का ये कहना है कि हम होम लोन में हमारे पास घर गिरवी है या गोल्ड लोन में सोना गिरवी है, लेकिन जब हम स्मार्ट अप्लायंसेस की बात करते हैं, जैसे स्मार्टफोन हो गया, तो यहाँ पर रिकवरी पॉसिबल नहीं है. तो क्या बैंक्स उसको रिकवर करने के लिए पुराने वाले तरीके पर जा सकता है कि जहाँ पर फोन लॉक हो गया अगर आपने किस्त नहीं भरी? और जिस तरह आज सेबी का एक वैलिड हैंडल जो लॉन्च हो रहा है कि अगर मैं पैसे भर रही हूँ किसी को तो मुझे पता चल जाएगा कि ये फ्रॉड है, ये सेबी रजिस्टर्ड नहीं है, तो ऐसा ही कोई ऐसा प्लेटफॉर्म कि अगर मैं किसी को पैसे ट्रांसफर करूँ तो मुझे ये समझ में आ जाए कि ये एक फ्रॉड अकाउंट हो सकता है या मैं इसमें फंस रही हूँ.
3 प्रश्न. पहला, यूपीआई पे क्या कोई चार्ज लग रहा है? तो ऐसा कोई अभी हमारा सामने ऐसा कोई प्रस्ताव नहीं है. दूसरा, आपने कहा कि क्या मोबाइल फ़ोन को जो लोन दिया गया है मोबाइल फ़ोन खरीदने के लिए, क्या उसे लॉक करने की इजाज़त दी जा सकती है या नहीं दी जा सकती है, जिस प्रकार से अन्य गृह लोन के लिए या ऑटो लोन के लिए इजाज़त दी हुई है। ये मामला अभी परीक्षणाधीन है। हम इसको क्योंकि इसमें दोनों तरह से हमारे पास में तर्क और वितर्क आ रहे हैं, उनका हम अध्ययन कर रहे हैं। हमारा ये प्रयास है कि जो हमारे ग्राहक हैं, कंज्यूमर हैं, उनका जो अधिकार हैं, जो डेटा प्रिवेसी है, वो सुरक्षित रहे। कंज्यूमर इंटरेस्ट, ग्राहकों का इंटरेस्ट, हित, वो सर्वोपरि है। साथ ही साथ जो लेंडर्स हैं, उनका इंटरेस्ट भी किस प्रकार से सुरक्षित रखा जा सकता है, ये मैटर अभी अध्याधीन है। तीसरा आपका प्रश्न था फ्रॉड के बारे में शायद, उसके लिए कुछ कार्य हम लोग, ये एक गंभीर विषय है, इसके ऊपर में हमने कई कदम पहले भी उठाए हैं और निरंतर हमारा ये प्रयास रहेगा कि किस प्रकार से हम जो फ्रॉडुलेंट तरीके से एक अकाउंट से दूसरे अकाउंट में पैसा निकाल लिया जाता है, उसको हम किस प्रकार से रोकें। उसी क्रम में पहले हमने आपको म्यूल हंटर के बारे में बताया था। उसी प्रकार से एक अन्य जो एक एक्सपेरिमेंट, ये अभी एक्सपेरिमेंट की स्टेज पे है, अभी इसको पूरी तरह से हमने लागू नहीं किया है। उसको हम अभी जो हमारा सॉफ्टवेयर है हम तैयार कर रहे हैं कि किस प्रकार से पूरी इंफॉर्मेशन लेते हुए पहले से ही यदि हम ग्राहक को ये सचेत कर दें कि ये एक रिस्की ट्रांजैक्शन है, आप इसको न करें, तो उसके लिए हम अभी प्रयास कर रहे हैं। अंग्रेज़ी में यही बात कहने के लिए मैं हमारे डीजी को निवेदन करूंगा, वो आपको अन्य सबके लिए, ये तीसरा वाला जो प्रश्न है अंग्रेज़ी में सबके लिए, और दूसरा वाला जो प्रश्न है जो मोबाइल फ़ोन के बारे में है, मैं डीजी MRR को बोलूँगा कि वो अंग्रेज़ी में इसी चीज़ को वो रूपांतरित करें। Yes.
Yeah. No, I will not try to translate what the governor said, but yeah, it's basically this: the digital payments intelligence platform. You would recall that RBI had set up a group; it had announced. We are now implementing it, as the governor said. The actual prototype is getting developed by our innovation hub. An entity is being set up to run this. The basic idea behind this platform is that you collect information from whatever sources are available: mule accounts, telecoms, geography, where the call is coming from, and whatever else, whatever information is available. And you have an AI system which is being trained on this information. And the idea is that this system will alert before a transaction by saying that this transaction is risky. Based on the alert, the customer will have to take a call or the bank will have to take a call. So we expect that this will have a significant impact in terms of reducing, the number of frauds that we see in the system. By no means, I'm saying that the number of frauds are high. The number of frauds are well under control. If you look at number of frauds per transactions in UPI and others, they're quite low. But these systems will further lower those transactions. Thank you.
The issue of digital locking, which I think it had referred to, I think the issue is under examination, as Governor has pointed out. And there are pros and cons on both sides in terms of balancing the customer rights and requirements, data privacy, and also the creditor's requirements. So we are examining the issue. We will evaluate the pros and cons, and then take a view at a later point in time.
Thank you, sirs. Next, I'll ask Ms. Sangeeta Mehta from Economic Times. Sangeeta, please.
Thank you, sir. Thank you. Sir, my question is on forms of business. You all have relaxed the guidelines, and you have said that the board of the banks will have the
discretion to decide. Why has RBI chosen to relax the norms? And sir, on one more thing on this, what would be the specific macro-prudential tools that you would be using for larger exposure framework?
So, first thing you are saying relaxation. Let me first of all clarify that that was only a draft. So it was not a final kind of a guideline or a direction. So the other thing is, see, we don't want to micromanage. We believe that the banks will take a conscious, considered, balanced view depending on their needs as to how they wish to conduct their own business. And so that's why, we have just left it to them. Second question was?
What would be the
macroprudential tools. A number of them.
No, we have
I'll leave it to the
tools which are available. Maybe we can look at, say, putting a cap on the exposure from all the banks, because I think the fundamental point which Governor mentioned was the concentration risk. All the banks' collective exposure to a single entity. So we could think of limits for that. But that is something which can be considered at a particular point in time, if appropriate.
And then we have supervision.
Yes.
Also. We can also put in supervisory measures in case required.
But this will be draft first.
Yes.
This is final now.
Forms of business is final.
Yeah. Forms of business is final.
No, the large credit.
That is draft. That is a draft circular.
Thank you, sirs. Next, we'll have Mr. Ashish Agashe from PTI. Ashish, please.
Thank you so much, sir. Sir, a quick follow-up to Vishwanathan's and Swati's questions. So earlier there was a perception that financial stability sort of foregrounds RBI's approach on things. Are we to now understand that it's a sort of turn towards being more pragmatic? And so second quick question, sir, how do you look at these adverse weather events right now? Since the last policy there have been more. So how do you look at this from an inflation and growth perspective?
I don't think, that you should see these measures as any kind of a relaxation or kind of letting go our sight, from financial stability. Stability is foremost for us. Whether it is price stability, whether it is financial stability, that is foremost not only for us, I think for the country as a whole, it's very, very important. Because if you do not have price stability, there are consequences. Similarly, financial stability, one episode of financial instability can take you, many years behind. So all of us need to be very conscious of that. At the same time, we have to be very careful. We have to ensure that we are not in any ways impeding growth or limiting whatever are the fulfillment of the genuine requirements of the various productive sectors of our economy. So financial stability, price stability will continue to be the primary focus of the Reserve Bank, as it is for all other central banks as well. Weather-related events, yes, they do have an impact on both growth and on inflation. There have been a number of them. At the same time, let's also keep in mind that the government has also put in place a number of measures now. The supply chain management is much better, and they are able to respond to them better. And so that's why we have seen that over the years, despite there being more weather-related events, as you mentioned, inflation has been much better behaved. It's been lower, last 10 years vis-a-vis earlier 10 years. So, and at the same time, we will also do whatever is required for the health of our banking system to be able to take care of any weather or climate related risks.
Thank you, sir. Next question will be from Mr. Ankur Mishra from ET Now. Ankur, please.
Thank you so much for the opportunity. Hello, sir. I want to ask you regarding the rupee depreciation, which you have mentioned in the policy also, you will take measured as and when required. In the MPR, the revision of exchange rate has been there from 86 to 88 this time. I want to understand from you, is the current exchange rate comfortable for you? And also talking about MPR, you have made projections for inflation also 4.5%. In that context, keeping the neutral rates and talking about the real rates here, it is below the estimate. How much of the scope of then easing is there for you?
What is below the estimate?
Real rate. 4.5%, sir, is the projection which has been given in the MPR.
Okay. So, your first question was on?
Rupee.
Rupee. So rupee, see, we do not, you asked me, whether you're comfortable with this rate, etc. So we do not target, any level or any price band. Our effort has been to manage any undue volatility, and we will continue to do so. Insofar as you are saying the real rate is concerned going forward, you are saying is 4.5%, that is in Q1. So there are a number of things, which go into it. And it's not only inflation that we have to look at, we have to also look at growth in our overall macro, in our monetary policy. And so, based on that, we have continued to retain the policy repo rate at 5.5% and the stance at neutral.
Okay. Thank you, sir.
Thank you, sir. Thank you, sir. Next, we'll have Mr. Mahesh from Financial Express.
Thank you, sir. With all these measures taken, are you still seeing any green shoots in the capex happening in this country, especially with the large corporates, apart from the infra and the renewable sector? Thank you.
Yeah, we had a good number, in Q1. We had a good, healthy number. A lot of sectors we are seeing good demand. I think cement, for example, auto, a lot of other sectors, they are seeing a good demand for capex. And on the whole, we are confident that capex will further going forward revive. Private capex will revive.
Thank you, sir. Sir, next it will be Mr. Aryan from Informist Media. Aryan, please.
Thank you, sir. This question is for both the Governor and DG Gupta, if possible. The MPC resolution said that the MPC was waiting for the impact of prior steps to take further action on rates. Eventually, the transmission of the prior actions will take place. Considering your growth and inflation forecasts for the next few quarters, what do you think will stop you from cutting rates, especially considering the real and nominal GDP? The real and nominal GDP numbers in the June quarter painted very different pictures of the economy. Thank you, sir.
Leave it to you.
Sure. As you know, monetary policy is a forward-looking response. So while Q1 numbers have actually been surprisingly good, as you said, but there is some softness projected in the second half of the year. And inflation numbers have also been surprisingly very, very benign. So I guess taking into account both of those developments, as we said in the statement, some room has opened. But it has to be contextualized with everything else that's happening, both domestically and globally. So it's a fast evolving, very, very fluid situation. Yes, Q1 numbers have been good, but those are only one factor in the number of things that we consider for monetary policy action. And that is an important factor, but it's a backward-looking factor. So to that extent, there is room, but as has been said and has been also repeated by Sir, a number of other things will be taken into account before deciding the next action in December.
Thank you, ma'am. Next, we'll have Mr. Laltendu ji from the Hindu.
Good afternoon, Governor. You have partly answered my question that I'll be asking. This is about the impact of the tariff on the Indian economy. Have the RBI or the MPC mapped different, the impact into different sectors? Thank you, sir.
Yes, we have we have the map. We have the details. You are aware, which are the sectors: gems and jewelry, shrimps, textiles. Now maybe a little bit of very little extent, generic branded pharma, which has now come in later, footwear. These are the primary sectors, which will be impacted.
Thank you, sir. Next, we'll have Ms. Subhana from the Mint.
Hi, sir. So, sir, I wanted to go back to the first question on monetary policy transmission. You said that and there has been an impact of yields have gone up by 30 to 35 basis points. Now, that has gone up since the June monetary policy, and we've seen some headwinds on monetary policy transmission. So, what is it that is RBI concerned about this monetary policy transmission getting impacted through the bond channel? In your assessment, would you bring back OMOs or GSEC purchases? In what way would you signal, to ensure the market that the policy repo rate adjustments, would feed through long-term rates?
See, the primary tool that we have for monetary policy transmission is the policy repo rate, and align the policy, the operational target, which is our Walker, to the policy repo rate. Last month, it was at 5.46%. There has been broad-based transmission, as I mentioned to you, across all sectors, whether it is money markets, bank credit, even corporate bonds. Corporate bonds are down from their peak by 50 basis points, 5-year AAA corporate bonds. And similarly, for other bonds also. Similarly, for government securities also. It's a process. It takes time, and we are hopeful that the transmission will take place, even in other sectors. Please also keep in mind that even in 10-year, as I mentioned, it's about 25-30 basis points. Only because of monetary policy, it had decreased by even more, 60 basis points. There have been certain developments after that. The other thing is, 10-year will not move 1:1. Let's keep that also in mind. So 25-30 basis points, while there is scope for more, and we feel that it should head downward. A number of measures have been contemplated in this regard, including, how the primary GSEC auctions will be held, the tenor of these government offerings, not only central government as well as state government. We are quite confident that monetary policy transmission will happen, even has already happened to a great extent, and will continue going forward.
Thank you, sir. From the left-hand side itself, Mr. Ben from New Indian Express. Ben, please.
Hi, sir. What is a complaint or a suggestion? The RBI statements and releases are coming too late these days, and in too many bunches. It could be given on a reasonable time. It could be, we can't do a better job of that. Like that banking, the regulation, 7 regulation changes, it came at 10:20. Or the last bulletin came at 11:30 or something. It's beyond our capacity to manage.
We work 24/7.
Sir, another thing.
I get the point, and we will endeavor that we bring them out. What time do you want them out? Huh? By 6 p.m. Okay.
Sir, my question.
All right, that is the Reserve Bank of India governor, repeatedly talking about how there is no letting go of oversight when it comes to financial stability with this, 22 other measures that have been announced, relaxations for the banking sector primarily. There will be enough guardrails that will be put into place when all of these regulations are announced, and it will only be done after public consultation. But that said, this is a big shift coming in, from the spate of regulatory tightening that we've seen in the previous few governors' regimes. Whether this is capital market financing, removing limits, allowing acquisition financing, lending for IPOs against debt securities, or, easing the risk weights, RBI has said, for MSMEs, residential real estate, for NBFC lending to infrastructure. All of these, mark really a sea change, a large exposure framework easing that also the RBI is talking about. So you had the RBI top brass addressing that. And of course, back to the policy, the pause that has come in expectedly with the RBI leaving room for more rate cuts on the table by saying that the lower inflation print does open up some space for action in the future. On that note, let me welcome our esteemed guests on the show. Neeraj Gambhir, Group Executive and Head of Treasury Markets and Wholesale Banking Products at Axis Bank, Pranjal Bhandari, Chief India Economist at HSBC, and Soumyakanti Ghosh, Group Chief Economic Advisor at State Bank of India. And also with us for these banking regulations is Anil Gupta, Senior Vice President and Co-Group Head at ICRA. Thank you so much, all of you, for joining us here. Anil, let me start with you before I go to the economists. This series of measures, banking reforms, as the RBI is calling them, that it has announced, whether that is, the overlapping businesses that, RBI has left to the discretion of boards, allowing, acquisition financing, lending for IPOs against debt securities. What do you make of these changes and the kind of additional credit this will unlock for banks to capture back market share from other financial players?
Yeah, thanks. So it's difficult to quantify maybe the incremental credit flow which may flow because of these relaxations, but definitely the measures which have been announced are in the backdrop of slowing bank credit growth, and all these measures, maybe especially the enhancing that removal of the circular on enhancing the borrowing through market mechanism for large borrowers, that is going to have maybe a favorable impact in terms of maybe credit flow, because that circular especially involves maybe larger corporates to borrow maybe 50% of their incremental borrowings through market mechanism. While that is possible for larger well-rated companies, but for large maybe companies which are rated in lower rating categories, it becomes difficult for them to raise 50% of their incremental borrowings from the capital market. So that should improve the credit flow to these corporates and should be beneficial for the overall bank credit.
Anil, let me specifically get from you some of the names, for instance, in forms of business, this circular being withdrawn. HDB is the clear standout beneficiary. For other banks, who are the ones that stand to benefit?
So, like all the large banks will have subsidiaries operating into, let's say, insurance, NBFCs, capital market businesses, merchant banking activities, broking. So while maybe some of these businesses, let's say, are not overlapping like insurance, capital markets, but the major concern was on the lending piece, which is done by through the NBFCs of these large banks. I think the intention is basically to give the free hand to these banks to continue lending, because see, these banks operate and cater to different customer segments through bank and their subsidiaries. These customers may require maybe a different kind of a setup. Even the employees which are working in these subsidiaries may have a different skill set. The branches which these subsidiaries will have a different skill set, a different setup. So basically, working the same product which is being catered by a subsidiary through a bank is very, let's say, less feasible. So that gives a lot of headroom for these banks to maybe cater to a wider segment of the customers and in wider product segments also.
Well, Anil, hold on. I'll come back to you in just a bit. Pranjal, quickly, your takeaways. The pause, as expected, has come in, and the RBI does seem to have left room for rate cuts in future.
Yes, absolutely. Going into the meeting, we were forecasting a dovish pause, and I'm still surprised at how dovish the pause was. A couple of reasons. One is the commentary on inflation, the fact that, they said clearly that there has been significant moderation. They've cut all kinds of inflation forecasts for FY26, first quarter FY27, fourth quarter FY27. Similarly, with growth, they've mentioned clearly that growth is below aspirational levels. And then they've cut the second half of the fiscal year growth numbers as well. It can be asked whether does that mean they will cut or not? And my sense is they gave both direct and indirect indication that they are open for more easing. One is that they said that more space for easing has come up. The governor also said that this is communication, but we also want to follow it up with credible action. So I think that was sort of a direct inkling that, some rate easing could come in the future. And I think there was some indirect way of communicating that as well, with 2 of the 6 MPC members actually preferring a accommodative stance at this point of time. I think that's a really big signal. So all of this makes me feel that if, we go into December policy and the 50% tariff is still there, and I think that's the main thing here, the 50% tariff, if it's there, then I would say that there could be easing in December and also in February. But I think a lot depends on the tariff rate at this point of time. Quickly, one more thing. I think the governor also said in his in the press conference right now that at this point of time it is not clear, but over a year, I think it will be clear to them that the negative impact of the high tariffs can be more than the positive impact of GST tax cuts. And that is why they have brought down their second half of fiscal year GDP growth numbers. So if that were to be the case, then I would say that December is going to be a rate cut.
Okay, Pranjal, that was quite comprehensive. Thank you. I mean, that is a list of things that makes this policy sound more dovish than we'd expected. Soumyakanti Ghosh, you had gone into this policy expecting a 25 basis point cut, which has not come. What is your base case scenario? We don't know how the tariff negotiations will go. What happens in December and thereafter?
No, thank you, Ritu. I think the policy is, if I look into this policy is basically very balanced communication in terms of rate space opening up in the future. But beyond the rate cacophony, this policy is actually beyond the rate cacophony, and it is actually a very good policy in terms of addressing the market microstructure. And if I have to borrow Ben Bernanke, it's constant policy discussion that is based. I think all these measures which we have mentioned in terms of the large exposure framework, the deposit risk insurance premium, and also the mergers and acquisition will do 2 things. First, it will increase the bank lending significantly, and also it will come at an affordable cost, because the transaction cost will also decline because of the many complexities around this circular. I don't want to get into the details, but the point is that, so this will serve the purpose of not only making the regulations more transparent, more constant, but also it will move in the direction of reducing the transaction cost of the banks. Now, having said that, coming back to the policy, I think if you look into the policy inflation projections, it was 4.2% at the beginning of this year for this current fiscal. Now it has been reduced to 2.6%. So there is a 160 basis point reduction. On the growth front, we moved up to 6.7. Now we have moved, then we came down to 6.8. Now we have moved back to 6.8. And if you actually very closely look into the RBI inflation revisions and the GDP revisions over the last 7 to 8 years, you will find a distinct pattern that even if the RBI inflation projections have been downwardly revised, but if the GDP numbers are not adjusted, the rate cut doesn't come in the policy. So possibly if you look into the numbers right now with the GDP growth rate being adjusted in the second half, I think that will open up space for possible rate cuts, maybe in December, maybe in February. The timing we can always debate. But as of now, I think the policy is clear in its communication that inflation is headed down, and the only way why the rates have not been cut in this policy is one to look through the prism of uncertainty. But the question remains there that even if we may wait for the uncertainty to recede, there is no guarantee that it will recede in the next couple of months. So it can actually increase. So it can cut both ways. But my sense is that there the policy has given enough indications of further easing in the next couple of months.
Okay, thank you for that. We have to take a mandatory break. Mr. Neeraj Gambhir, when we get back, we want to ask you about how the bond markets have, absorbed this policy. But we have to take a break. Back in just a moment to continue this discussion.
After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%.
Welcome back. We continue our monetary policy discussion with a whole host of experts. Mr. Neeraj Gambhir, just before taking the break, we were talking about the bond markets. Perhaps OMO is not something that the governor said, but plenty of dovish commentary. The 10-year now at 6.56. Where do you see it settling, and some of the biggest takeaways for you from this policy?
Thanks, Ritu. But before I go to the bond market commentary, I want to say something about the overall direction of this policy. I think it's really a breakaway policy and standout policy for me as far as the number of regulatory changes in the banking sector related changes that they have introduced. Some of these are long-standing demands, for example, allowing banks some kind of a role in M&A financing. Some of these are basically changes that were in the draft stage, for example, the forms of business circular. And some of these were changes that they have recently made. For example, the changes with regard to opening current accounts as far as the current account discipline circular was concerned. So these are very, very significant and important changes. And some of these changes will have quite a bit of bearing on the way banks function. Of course, for many of these, the devil will lie in the detail as to the exact form of the circulars and what is permitted and what is not permitted. Coming to the bond market, I think the market was expecting a little bit of a dovish bias in this policy. But I think the dovishness in the policy is a little bit more than what the market was expecting. So we've seen some pullback in the yields, even although not very much. The key issue for the market is two. One is that we're going to have significantly higher supply than what the current demand seems to be. So we seem to have some kind of a demand-supply mismatch. Second, we're going to have a new 10-year bond. And as a result of that, the old 10-year bond seems to be sort of going a little bit out of the favor. So that's having some kind of a bearing on that yield. But even if we were to get a 25 basis point rate cut in December, which is what the market will likely play for now, I do expect the long end of the bond curve not to do much. Most of the benefit will be seen at the front end of the curve. So maybe up to 5-year part of the curve will see a much better outcome if there were to be a rate cut in December or even in February.
Okay. Well, may I butt in, Ritu, with your permission? We've just come down from the press conference. Soumya, I wanted to ask you, I specifically asked him, you have dropped the word limited. In an earlier instance, you said it gives us limited space for accommodation, and now you say there is space for accommodation. Do you get the feeling that it is not one but more than one cuts possible because they have wantonly dropped that word?
Yeah, it could be possible, Lata, because as of now, they have moved the needle from 4.2, if you remember, in the April policy to 2.6 now, and they have moved the needle from 4.9 to 4.5. So in December, there could be further, if the inflation trajectory behaves like that. And there could be some more downward revisions in February. So if it goes down, there could be space could open up actually for maybe more than one rate cut. Where that will happen, whether in December and February, that's a matter of open debate. But I think the communication is very nuanced and structured and positive for the markets because it gives a clear signal that the central bank, as you correctly said, has moved beyond the limited rate action to rate action, so which could be not in single digits, it could be also multiple. So that's, I think, the bottom line. And separately, I think I was just speaking to Ritu also, I think the market is actually beyond the rate cacophony in terms of improving the market microstructure.
Oh, yes, of course. As Neeraj says, that makes it a standout policy because of the many deregulations that have been announced. But Pranjul, would you agree? Does the tone sound like more than one cut?
I think so. I think, we waited this time around, despite inflation being low, growth being lower. We still did not do a cut this time because there are a couple of uncertainties still. And one big uncertainty is what really happens once Diwali is over. In the run-up to the Diwali, we have GST rate cuts, meeting Diwali consumption demand. And all of that is holding up growth over September and I would say even October. And we are seeing it actually very clearly. We are seeing in PMI new orders are falling, but export orders are falling, but domestic orders are rising. So we have some offset because of the GST tax cut right now. But once Diwali is behind us, then I think sentiments towards growth will worsen very quickly and rapidly. If 50% tariff is still there at that point of time, then I think we are geared for 2 rate cuts, and I would say over December and February. But a lot depends on the 50% tariff. Lata, since you asked, I want to also mention one thing. For me, the standout was not just the dovishness and the regulatory points mentioned, but also discussion on the currency. We are also very used to RBI talking about how they only lower volatility in the rupee. But this time around, they actually went ahead and mentioned that appropriate steps will be taken on the currency front, and they're watching the currency very closely. I've never really seen this in the past, and my sense is I won't be surprised if over the next year we start seeing a lot more steps on attracting capital inflows into the economy. I think even some of the regulatory steps today, for example, re-looking at the ECB norms, also this whole banks M&A financing, which could indirectly get some FII money in. I think all of that also has one eye on the rupee and capital inflow. So I would just sort of leave that on the table as well.
Okay. Well, I wanted to, I take your point that he was a little forthright on the rupee, probably to scare away speculators, was the way I saw it. But yeah, we may have capital attracting steps. But I wanted to ask Neeraj, for the same reasons that you say it stand out, more acquisition finance possible, more loans against shares, more loans against debt, more IPO financing. Will credit growth be a different number given all this? I mean, if you were forecasting 10, will you forecast 12 now?
I think more than the credit growth in the near term, of course, this is all subject to the finer detail that comes out. I think what was happening was that certain forms of financing was increasingly moving away from banking system into NBFCs, into mutual funds, into FPI investments through the VRR kind of route. And what this does is to bring some of that financing back into the banking domain. So effectively, it's kind of making banks far more relevant now for the corporate borrowers. And for corporate borrowers, the financing requirements are changing. It's not only about working capital, it's not only about capex, but it's also about a whole lot of other things that they want to do. And that includes acquiring assets both domestically as well as offshore. So again, it's subject to what the fine print is, but it brings a lot of that financing back into the banking system domain.
Okay. Actually, you're right. Probably NBFCs will lose if banks do more of capital market financing. Maybe the total will not improve. But Soumya, would you bet higher capital, higher loan growth? Have you changed your number from what it was before the policy?
No, I think, Lata, of course, it will lead to higher loan growth. If you remember, I think this large corporate exposure framework we had also mentioned earlier that it is actually leading to more external commercial borrowings on the part of the bank. So banks will actually now look more inwards. And just to give an example, I think that 50% norm over rupees 10,000 crore was applicable if the banks were to make a 3% provision. So now this 50% norms is going. So that will obviously lead to a significant transaction cost, the rate of interest also on the part of the banks. The corporates will have also better bargaining power. And my sense is that this deposit risk insurance premium, mergers and acquisition or LF, all these measures will actually propel the credit growth. So that I think is one of the positive developments from this policy.
Well, Anil, very quickly, we've spoken about the forms of business and the, that 10,000 cap, etc. But this expected credit loss also, the expectation was it would come in earlier. Now RBI is talking about 2027 with a 5-year ahead glide path to meet those capital requirements. To what extent had banks already prepared and how much more headroom will this give them? This kind of an easing over multiple years to get to the level that is required per the norms.
Sure, Ritu. So this discussion paper actually came in January 23, where this proposal was there to implement ECL for the banks. And at that point in time, based on our discussion with various banks, we estimated that it could have an impact on reported capital ratios, let's say core equity capital ratio, which we look at, of maybe around 300 to 400 basis points for the banking system. Maybe larger banks, private banks, have carried some floating provisions which can lead to maybe some kind of a lower impact. But at a system level, we expected maybe that if the ECL is implemented from April 2025, because the circular came in January 2023. So we estimated 300 to 400 basis point impact. Now we are saying that we will have 2 more years compared to maybe our initial estimates. So this will definitely moderate the impact from what we initially estimated of 300, 400 basis point now, because over 2 years, not only the banks have made provisions on their stress pools, second, the capital ratios have improved, NPA numbers have gone down. Also, the look back period when you will do your ECL modeling will not have that COVID period, which had a high kind of a stress on the asset quality. So the look back period for the modeling will throw up lower maybe PD and LGD numbers. So that will have an overall favorable impact on the ECL impact whenever it happens. 5-year transition frame was also proposed in the discussion paper. So not incrementally a new thing, but definitely provides maybe some headroom for the banks to transition.
Okay. That's a comprehensive reply. Thank you very much. Anil, thank you, Neeraj, Pranjal and Soumya as well for adding more color and helping us understand what the governor meant when he spoke at the press conference as well. Thank you, Ritu, for taking us through. The key takeaway really is that it is a dovish pause. We should expect one more cut. And as our economist experts say, probably 2 more cuts. And as Neeraj said, this is a brave new charter for banks. Much less or fewer regulations. And that's a breathing space. But will credit growth grow? That will depend on whether there is economic growth as well. And that's where Pranjal has raised some very important question marks given the global environment. Thank you very much for watching this special monetary policy coverage. It's time for a break now, and then I suppose a little bit of business lunch will follow.
Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormas Fatakia, and the markets have begun the October FNO series on a very positive note. The Nifty currently trading near levels of 24,800, 160 points higher on the index, and that is courtesy the Nifty Bank. And it is the Nifty Bank that has been leading the charge higher for the benchmark index as well. 650 points on the Nifty Bank, still hovering around that 55,300 level, but more importantly above the mark of 55,000. So good going for the Nifty Bank, and the index heavyweights are the ones that are leading the charge here. Take a look at that. ICICI Bank, HDFC Bank, Kotak, Axis, all of the private banking majors doing well. Not doing well are the PSU banks, SBI and PNB, and the PSU banking index in general has been sulking after the measures announced by the RBI in its policy. Of course, there are a lot of other triggers as well, considering the fact that we started the October series with record FII short positions. The long positions ratio was only at 6%. So there is, of course, that short covering factor to be taken into account as well. But for now, a good day for the benchmark index as of yet. But the big announcements of the day, the Reserve Bank of India announcing a slew of measures aimed at enhancing the resilience and competitiveness of the Indian banking sector. Ritu has been on top of this all day long, and she's here with the key takeaways. Ritu.
Well, Hormaz, I mean, this is the first time in over a decade of covering RBI I've heard of more than 20 banking-related measures being announced in a policy, and that has really been the story of this policy more than the monetary policy action. Whether starting with the expected credit loss, application for all banks, which was expected to kick in earlier. Now, RBI says will only come into effect from the 1st of April 2027, and even after that, banks will be given a 5-year glide path until 2031 to absorb the loss, to absorb any additional capital that they have to provisions that they have to provide for their loans. That is one. Secondly, and RBI is yet to give more details on this, to reduce the overall capital requirement for banks, RBI is also proposing to ease the risk weights for two key segments, MSMEs and residential retail, home loans. That is something we'll watch out for. The draft circular on forms and business, which had proposed that there be no overlapping business between the bank and its subsidiaries, has been scrapped. It was a draft, yes, it had not been implemented, but that had, put some sort of an overhang on companies like HDB Financial. For all banks that have these subsidiaries, that has now been scrapped and left to the discretion of bank boards entirely. Apart from this, for after more than a decade or more than a few decades, RBI is allowing banks to get into M&A financing. We'll have to see how much market share banks will therefore be able to wrestle away from other financial institutions now that they're going to be allowed to do this. The regulatory ceiling on lending against listed debt securities has been done away with. RBI has also increased the limit for lending by banks against shares from 20 lakhs all the way to 1 crore rupees, and for IPO financing from 10 lakh rupees to 25 lakh rupees per person. These are big changes when it comes to lending for the capital markets. Apart from this, there was a 10,000 rupee cap, for per specified borrower, above which, they couldn't borrow from the banking system. They would have to raise their money through the capital markets. That cap has been done away with entirely. As far as the large exposure framework is concerned, that continues on an overall systemic level, but RBI will look at more specific levels at a bank level. And infrastructure financing by NBFCs, the risk weights there are also proposed to be eased. So a draft of measures for banks and financial institutions that will surely have far-reaching implications.
22 measures. Well, a lot of them, Ritu. Thank you for that update. It definitely showing on the Nifty Bank in today's session. But the auto sales, the other big trigger for the day, and they have been trickling in as well all through the morning. Sonal is here to summarize the ones that have come in so far. Sonal.
Thank you so much for that. They've been decent so far, some of them even better than Nomura estimates. So let's start with the big one, that's Bajaj Auto, where their total sales came in at 5.1 lakh units, which compares with the Nomura poll of 5 lakh units. Total sales, that means, is up 9% on a YOY basis. The domestic sales were up 4% on a YOY basis, but this growth this time around was led by export sales, which was largely expected. So 18% growth on a YOY basis for exports for Bajaj Auto. For M&M, let's talk about their auto business first, because that's where their total sales came in at 1 lakh units, which compares with Nomura estimates of 90,000 units. total sales saw a growth of 16% this time around. The tractor sales did really well, 49% higher on a YY basis, and this is higher than the estimates as well at 66,111 units. For Escorts Kubota as well, so it seems the tractor segment is doing really well. Even for Escorts Kubota, tractor sales were up around 47%. For Hyundai as well, the numbers have come in better than what Nomura was estimating. Some of their categories saw highest ever sales this time around, so Hyundai did well as well. For VST tillers, the total sales went up by 35%, so the agricultural segment, the GST cuts, all of it really aided sales for these companies this time around.
Indeed. Sonal, thank you for that update. GST definitely having an impact on these sales. But India's trade and economic partnership agreement with the European Free Trade Association is slated to come into force today. The EFTA bloc comprises of Switzerland, Iceland, Norway and Liechtenstein. And under this agreement, New Delhi has received an investment commitment of $100 billion in 15 years from the group, while allowing several products such as Swiss watches, chocolates and cut and polished diamonds at lower or zero duties. My colleague Parikshit spoke to the Norway ambassador to India on the trade pact. Listen in to what she had to say.
Well, I said India is the biggest market in the world. It will be the biggest consumer market. We are smaller markets comparatively. So of course, it's a disparity in one way. But all EFTA countries, they have very clear technologies, cutting-edge technologies in different areas. That means that there is complementarity between India and the EFTA countries. And for Norway, they are particularly in the field of energy and green energy in the maritime space.
Now, the US government shut down following disagreements between the Congress and the Trump administration over a funding bill. This report tells you what it means for their economy.
The U.S. government shut down much of its operations on Wednesday as deep partisan divisions prevented Congress and the White House from reaching a funding deal. That sets off what could be a long, grueling standoff that could lead to the loss of thousands of federal jobs. The 15th government shutdown since 1981 commenced hours after the Senate rejected a short-term spending measure that would have kept government operations afloat through November 21st. Democrats opposed the legislation due to Republicans' refusal to attach an extension of health benefits for millions of Americans that are due to expire at the end of the year. Republicans say the issue must be addressed separately. There was no clear path out of the impasse, which agencies warned would halt the release of a closely watched September employment report, slow air travel, suspend scientific research, and withhold pay from U.S. troops. It will also lead to the furlough of 750,000 federal workers at a daily cost of $400 million. Democrats are under pressure from their frustrated supporters to score a rare victory ahead of the 2026 midterm elections that will determine control of Congress for the final 2 years of Trump's term. The healthcare push has given them a chance to unite behind an issue that resonates with voters. Along with the extended health subsidies, Democrats have also sought to ensure that Trump will not be able to undo those changes if they are signed into law.
I don't know, we'll probably have a shutdown.
Trump has refused to spend billions of dollars approved by Congress, prompting some Democrats to question why they should vote for any spending legislation at all. Independent analysts warn the shutdown could last longer than the budget-related closures of the past. Trump and White House officials have threatened to punish Democrats with cuts to government programs and the federal payroll. Last week, Trump's budget director threatened permanent layoffs in the event of a shutdown.
With that, we call time on this edition of Business Lunch. Thank you so much for watching. Midcap.
After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance.
Great. Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. M&M, that's the stock on our radar, beat street estimates with total September sales coming in at 1 lakh units versus estimates of 90,000 units. My colleague Parikshit spoke to Nalinikant Gulaganta, who is the CEO of Automotive Division at the company, and began by asking about the festive season so far and the sales in the month gone by.
Just from an SUV perspective, domestic 56,233 vehicles is what we sold. That's about 10% year-on-year growth for the whole month. And commercial vehicles quite strong as well. 26,728 vehicles. That's about 18% year-on-year growth for the month of September. Now, as you know, because of GST, there's quite a bit of demand which got bunched up at the post 22nd of the month. So we're also tracking retails on the ground. So what I'm going to talk about is dealer reported customer retails for the first 9 days of Navratra, starting 22nd onwards till now. Very strong traction so far. SUVs, the dealers are reporting about 60% growth compared to the exact same 9 days of Navratra last year. So it's an apples to apples comparison from that perspective. 60% growth in SUVs and then 70% growth in commercial vehicles relative to what it was in the first 9 days of last year as well. So good start to the festive season, if you ask me. Of course, some of that is pent-up demand, which came through because folks were waiting for the new GST rates to come into effect on 22nd as well. But definitely the GST toll auto reforms have given us fillip to the demand portfolio as well.
Right. I would also like to ask you about how do you start October? One of the things that you have mentioned in your press statement is that the surge in festive demand has placed significant constraints on availability of trailers, and we are working to improve dispatches to our dealer networks within the constraints. So could you give us a sense of the kind of booking pipeline that you're working with, what kind of growth that we could see in dispatches, and how are you looking to address the shortage of trailers?
Yeah, it's a tough one to predict at this point in time. The demand is quite strong. The inquiries and walk-ins have been quite good as well. So it's not necessarily a demand constraint challenge we have. As an industry, we have a trailer shortage, primarily because most of the deliveries started happening post 22nd, so that we are able to take in the right GST into our invoices. So that's created a bit of a challenge in terms of trailers. And we are kind of working through it. One of the things we're doing is increased dispatches to trains is one thing we're doing. And of course, working very closely with our logistics partners, including Mahindra Logistics, to solve this problem. So it's something which will play into October as well. So hard to say at Parikshit at this point on what will play out. We're of course super focused on making sure that we are able to dispatch the vehicles and we catch the festive in time. Having said that, of course, the demand will flow into November. We have also see that it's going to be a strong wedding season this time in November. So we're optimistic that we'll continue to get demand going into November as well.
Right. Now, if I were to ask you about the spread, the sales spread between rural and urban, what has been the sentiment like and what would be the ratio of volumes coming to you?
Yeah, so just dialing back over the last 5 months, rural has been quite strong for us. And I'd say even for the industry, rural has done well. We've been quite happy with our urban performance, even in the last 5 months, although industry has struggled a little bit. But going into the festive, what we have seen early signs is strong demand for Bolero and Bolero Neo. And definitely strong growth for Scorpio and coming as well, which has a rural bend to some extent. So we continue to see that. So definitely that's continuing to play through. But urban demand has certainly come back in terms of walk-ins, in terms of inquiries. We see that urban demand has come back. Certainly has come back on 3XO, which is our compact SUV portfolio, and it's come back in terms of three-door Thar as well. But yeah, we're quite optimistic on the urban side this time going in the festive.
Right. So what would be the current ratio in terms of percentage of sales coming from rural, percentage from urban?
Yeah, so it varies, but normally when we come into festive, there's a little bit of an uptick in rural demand. So we are roughly about 50-50 at this point in time. And that goes back a little bit down on the urban side. But yeah, it's somewhere in the 50-50 going into the festive.
Right. Now, in terms of your top volume drivers in the portfolio, what would those be? The top 4 to 5 vehicles?
Yeah, Stop UN is definitely top of the heap there. Very strong demand, continues to be quite strong for us. And 700 goes right after that, renewed interest with the GST cuts which have happened. 3XO as well now with Revex, which are new variants coming in, we're seeing significant interest there. So all of these models have seen cuts in excess of 1 lakh. If you take 3XO, it goes all the way to 1.5 lakhs, and that's on a CSUV vehicle. So significant demand coming due to that as well. But the interesting trend for us is also folks trading up in variants, right? And it's not like just because the price has gone down, they're actually spending less. They have the same budget, and they're looking to see if they can get a better variant for the same budget they have. So which is an interesting twist.
Outlook on EV sales right now, how much of that is coming in terms of volumes from your total sales?
Yeah, it's a good question. So when we started putting out our BEVs in Q4 last year, we were about like 2 to 3% of our bookings was coming from EVs. Now it's close to 8%. And we have an event coming up in November where we'll be unveiling a new EV as well. So our expectation is we'll stay in the 8 to 10% going forward of our overall bookings, which will come from EV. And then over a period of time, as we add more to the portfolio, new IQ as a platform we launched in August, as that comes in a couple of years, we will then start to go towards the high teens to early 20s.
Okay. Finally, I would like to ask you about, you mentioned a new EV launch coming up. How many total new product launches in this fiscal to keep exciting the market and keeping the demand momentum going?
Yeah, so we are focused on both on ICE and EV. We have an exciting launch coming up in the EV space as well, but we have a strong launch lined up in Q4 for the ICE side as well. So quite excited to bring both to the market. Both are very compelling products, and one will come in Q3, the second one will come in Q4.
Well, that was the management of Mahindra & Mahindra speaking to our colleague Parikshit. Very strong demand is what the company says they are witnessing. We'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%.
Welcome back to Mid-Cap Radar. Well, all eyes are on the big LG Electronics IPO slated this month. My colleagues Manglam Malu and Shilpa Ranipeta caught up with LG Electronics India Chief Sales Officer Sanjay Chitkara and Chief Accounts Officer Atul Khanna and began by asking them about the rationale behind the timing of the IPO.
See, Diwali is a very important and it's a big season for our industry, and where consumer sentiments are high and our sellout are very good. So I think that's the right time for this IPO. And talking about our parents, I think it hardly matters where the parents are. Today our focus should be how the Indian subsidiary is doing their business and how they are growing and reinvesting in the market. I think the focus should be on that. And in that sense, LG is creating a benchmark. See, we came in India 28 years ago. And at that time, very few global players could be able to recognize the long-term growth potential of India when we started our business. And from last 28 years, we have been working very hard to make consumers' lives good. And I think this IPO is a new future journey for us.
So we've had a lot of MNCs on record say that they're looking to cash out on their India chips to be able to reinvest in their own business back home. I just wanted to understand how that money will be utilized by them, because no money is coming into the company. It's an OFS.
So it's a, you rightly mentioned, it's a OFS where 15% equity parents are liquidating. And as I have mentioned, LG, we are reinvesting here in India. We are coming up with our third plant. It's in Sri City, Andhra Pradesh, where our $600 million US dollar investment we are doing. And this is not only a conceptual stage. We have already done the groundbreaking ceremony in the month of May. The construction has started, and our plan is that by end of next year, sometime just near to Diwali, we start production there in our first line. And there will be a phase-wise investment, and by 2029, we'll finish this project. Notably, this plant is much bigger than our existing two plants. In size-wise, it would be roughly 3 times bigger, and we are doubling up our capacities. We are investing in new products, new technologies. We are also investing to improve the retail infrastructure in Tier 2, Tier 3 town, introduction of many new products. We are also scaling up our B2B business. That's our focus area. That is the HVAC, information display panels, e-blackboards. So a lot of exciting things are going on in LG these days.
Your financials are much ahead of your listed peers, whether it's even your return on net worth, even your PAT margin is much better than the industry. So on the face of it, it does look like the IPO is very conservatively priced. What is the sort of rationale behind this, conservative valuation that you're looking at? Is it that you're looking at leaving more value on the table for investors?
So you are very much right that any IPO of any company would be depend on market sentiments as well as the strong fundamentals. Our fundamentals are very strong, and it has the IPO price band is being consistently directed and guided by our BRLMs, banking partners, and we are following their guidance and making it a room for our investors also to take some portion of that money into their own hands. So that is a very positive move, and we cannot call it as exactly the very lower times in terms of conservative, but yes, it is I will say optimally priced in terms of market sentiments as well as our banker guidance.
Let's talk about your numbers. Sales over the last 3 years have compounded at around 11%. Your margins have seen an improvement. So EBITDA has compounded at over 25 to 28%. Do you believe that these are numbers that can sustain going forward, or will you accelerate the pace of growth?
Let's not forget that we are serving to a structurally massive growing economy.
Right.
It's a 41 billion TAM for our products. If I leave aside the mobile phone business, and it's going with a 14% CAGR growth as per that share report, and it will become 73 billion US dollar market for us. And premiumization is happening. Currently, the India is sitting at a level of say around 17% as per that share report, and it will grow up to 25-27%. And LG has very strongly positioned itself as a very premium brand in India. So we believe that we will be the biggest beneficiary of this premium drive. And let's not forget that the penetration rate of our products in India is very low. A product like microwave, just 4% of household have, and air conditioner just 11%, a washing machine 21%. If we compare the other major economies like China or USA, they are sitting at 80-90% level.
So will you grow faster than the projected market growth?
Definitely. Being a sales leader, my intention is to...
That's your intention. Next to you is the accounts leader as well.
Our endeavor is always to expand our margins, and there are some reasons behind that we are expanding. We are doing a lot of investments into structuring our Indian, I would say, local insights as well as local sourcing, reducing the dependency on overseas buying. We are procuring almost 54% of the components and sub-assemblies in-house.
Right.
As well as our key endeavor is to all produce key components, heart of the product in our in-house factories.
So we have just a minute to wrap this. So we'll just do a quick fire here. You have to answer in as little words and as quickly as possible, right? Which one do you believe will be the category that will grow the fastest in your overall portfolio?
Air conditioners.
Air conditioners. Which will be the margin driver for the business in the next 3 years?
Or B2B businesses.
How much will that account for in your overall sales?
Currently it is around 8%, but it will definitely, the contribution will go up.
And services as a proportion of your sales are 2%, how much? 2%. How much will that grow to?
It is definitely 70-80% it will grow.
One new category that you probably are looking to enter that you're not already present in?
See, it's a competition sensitive information. I cannot disclose right now, but there are plans are going on.
One category which you don't believe is ripe for you to enter?
I don't think so, any category.
You shut your mobiles business, so one thought that
See, that was a not a local decision. We did this in year 2021. And because we wanted to focus on where our strengths are there, that is appliances and TV, and we want to optimize our resources and investments.
A competitor that you are constantly keeping an eye out on?
Our last year performance.
That's a good one.
All right, that's the big upcoming IPO. We'll be watching out for that one. But for that, we'll slip into a short break. When we come back, we'll get into more stock-specific news and the market action as well.
MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance.
$1,200 crores, and that is the place where we know that there has been a massive equity dilution for all the existing shareholders because of all the troubles that the bank had gone into, and there was requirement of new capital infusion, getting the confidence back by having people like SBI, Kotak all chip in. And I think post the dilution, currently if we see the market cap at levels of around 2021, the market cap is 67,000 crore. Even if the gentleman were to wait to get his price back, which means that he will need to get a market cap of almost 3,35,000 crore. This is the type of market cap when, Yes Bank did have during its heydays, but I think looks very, very unlikely that that will happen anytime soon. This is despite the fact that recently SMC, Sumitomo Bank from Japan has taken a stake, and they will do all the right things, and already the bank has turned around, giving good return ratios. But I think it's going to be very difficult to get back to its price. At the best, I think if the viewer has confidence in this bank's long-term prospects, one can cost average, but we prefer investing into other private sector lenders like ICICI Bank or an HDFC Bank or a Kotak Bank for long-term purpose.
Okay. Saumil, your view for Yes Bank?
Yes Bank in the very short term, yes, definitely looking good in the very short term. Taken support at 20 daily moving average, high top, high bottom formations. Great setup, and inverted head and shoulder pattern is also forming. So I'll be expecting a target of 23 and 25 levels max. And I'm not suggesting to hold on for a long term or a medium term outlook. A short term trade is all right to me, but not in the medium term or long term.
But what is the level that they can keep an eye out on then in the short term? Because they bought it at around 100 levels.
In the short term, the target is not more than 25. So that's the target I have.
Okay, 25 is the target for short term only, not a long term story, according to Saumil on the charts and technicals. Let's move on but to the next query then. This is from Rajat Jain, who's writing to us from New Delhi. He's holding 200 shares of Tata Motors. Price is 100 rupees per share. Wants to know if he can remain invested for the long term for Tata Motors. Parthiv, your view for Tata Motors, obviously we have that division that's coming in now for the CV and PV. The record date has also come as 14th of October. But your view, they bought it at 100. 700 is what the stock is trading at. Should they book part profits or continue to just remain invested?
No, I think he can certainly hold on to this. One, his cost price is abysmally low. He's already sitting on 7 times returns on that. And I think today only it is announced that Tata Motor again regains the second spot in the passenger vehicle segment, which is I think a huge achievement, beating likes of Hyundai and M&M. So they are doing fantastically well in the domestic front, especially now that they have new pipeline of products in the EV segment. I think the volume growth should come back very strong. And that is what they're guided for, and all the stimulus that the government has given, especially for the premiumization and the premium car segment. I think that should benefit likes of Tata Motors pretty well, was focusing on that strategy. Even the JLR, I think, despite all the difficulties in terms of the business due to the tariffs, and more importantly, I think they are under a lot of cost-cutting measures. And the China market is expected to bounce back within the next 6 months. So I believe that JLR should also start contributing going ahead. And I firmly believe that the demerger move by the management, especially segregating the passenger vehicle division and the commercial vehicle division, I think it's a very good move because that will certainly unlock a lot of value, because we know that generally the CV segment is a lot more attributed with the cyclicality and doesn't come up high premium. So I believe Tata Motors is a good buy here and also hold on to the position for the long term.
Sure. And Saumil, your view for Tata Motors?
Tata Motors in the very short term, yes, it has done really well, and I was not expecting Tata Motors to start making high tops, high bottom, but I think from here on, short term definitely gets a target of around 740-45 levels, but in the medium term outlook, it has been making low tops, low bottoms. So I'll be waiting till 700, close above 750. Once we get a close above 750, I think the next level on the upside would be 820.
Okay, keeping an eye out on those levels over there. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll still be discussing more stock-related queries. Stay tuned in for that.
Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with the neutral stance.